We spoke a lot about Amazon's big day earlier, keeping busy not just with those getting out deliveries before Christmas, but processing returns over the next couple of days. And it is not the only retailer, no doubt, seeing customers bringing back the gifts they don't like, they don't need, or don't want. So, with that holiday spirit in mind.
Love the spirit of giving.
It got us
Nice,
thinking, in the
nice
spirit
find.
of holiday returns, what stocks do you wish you could send back? Tim Seymour, kick it off.
I think it has to be L Brands. So they Bath and Body Works and, of course, Victoria's Secret. And you've got two different fortunes there, but really getting weighed down by Victoria's Secret. I don't think anything is going to change here. By the way, whenever we used to talk about L Brands, we would get gratuitous footage of people, models. Well, anyway, so we'll stop that. But the bottom line is this stock, as we went into the decade, was an $18 stock, traded up to $95. It will leave the exact same price at the end of this decade. Bath and Body Works is growing 7 to 8%. Victoria's Secret is contracting 4 to 5%. I think this is a stock that, despite activism and some dynamics that could change the boardroom, is left with a brand that is no mall to hang out in, which is really where I think a lot of this is built.
Would anybody pick up Tim's return? Anybody a buyer of LB?
No.
There we go. I think that says it all.
All right.
Gina, your return to sender stock.
My return to sender is Apache. We talked about mean reversion, but this is definitely one about avoiding a falling knife. Sometimes things are cheap for a reason. You look at energy. Energy's at 19 times trailing. You look at Apache, they're 15 times, and the reason is that they are just having tremendous troubles with a really key drilling that they're doing down in Suriname, and they're not making any real effort there. I mean, they're making a lot of effort. They're not making any headway there. And they're having troubles elsewhere, which is to say that they are having real production troubles. How are you going to make money if you can't produce?
$68 stock 5
So
years
this
ago.
is, Gene, it's not a cyclical energy call. You say this is a broken company.
This is a broken company.
Got it.
Okay, now, Victoria, do I understand it as the Houston resident on this panel, you are sending an oil and gas stock also back?
I am at least part of it, right? I'm not saying you have to completely sell out of ExxonMobil. That's our pick. But it maybe trim the position a little bit, not because we don't like it as a holding for the long term, but really because we think that, there's a better use of some of the funds we could have received from that over the past year. You look at that chart year to date on pricing. I mean, from the end of the first quarter, it's just been downhill all the way. So we think there were better uses of funds than keeping it in ExxonMobil.
It's got a AAA credit rating. It doesn't have a lot of debt relative to its cash flow. It's got a 5% dividend yield.
Well, that's why long term, I think it's an okay holding. But trim some of that position while it was doing the steady decline down. Use those proceeds for a higher quality name in your portfolio that was doing better this year.
Okay, and a final return to sender from Dan Nathan.
I think what Victoria says is really important. There's better uses of funds, right? That we don't all have finite amounts of capital like you there, big guy. I mean, but what I'm saying is, so let's go back to Apple. Oh, we have it infinite. Yes, correct. Apple. And just to put, I've been wrong on this thing for the last, let's say, 10% over the last month or so. The thing has gone parabolic. I think the last time it did that was in summer into the fall of 2018. It had a 20+% return, almost in like a straight line over 2 months. Over the next few months, it dropped 45% peak to trough. This stock has had multiple 30+% peak to trough declines in the last 5 years. So the only point I'm making is I'm not trying to get you out of Apple. I'm not your broker. I'm not your hedge fund manager. I don't own it for you. I'm just telling you that this stock, the biggest one in the world, has a tendency to lose a third to 40% of its value every couple years. And it usually happens after you have a parabolic move like this.